brought to you by our good friends at OptionsHouse. Mighty Joe Young, how you doing on this synthetic Friday?
Pretty good. How are you, Joel?
Sound a lot better than you do.
Why is it synthetic?
Yes, tell
Because
us. That's what I was just gonna
synthetic
ask.
Friday, because tomorrow is like a weekend for me.
Oh, right. Yeah, Joel's going on vacation, everyone, so he's decided to rub it in everyone's face that has to work here all week.
Hey, listen, working with you guys, I certainly deserve a vacation. And if anybody out there is thinking of robbing my house, don't do it because I have a killer dog that will attack you, and I have someone staying at my house.
Yes. Then, and just so everyone knows, the fierce dog's name is Perry with an I.
Harry with an eye.
Sounds like the worst thing she could do was like paint your nails mismatching colors.
A dog that's a manicurist. Okay, that's good. That's good.
So, Joel, I've got a piece of trivia for you.
You mean you're going to bore us with trivia now before
That's
you
right.
have your
I'm
segment?
getting a jump start
So
on
this
it.
means you're not going to do it during your regular segment,
Of course,
right?
I'm still going to do it during the regular segment,
Okay.
but this one is too important to pass up. So, everyone's heard of Lincoln Logs, yes? Say aye.
Aye.
Okay. Does anyone know the origin of Lincoln Logs?
Well, I could think of one, but I don't know if I can say it on the air, and it has to do with Abraham Lincoln.
Wow. That's like the captain's log on Star Trek.
Okay.
So, anyways, Lincoln Logs are not named after Abraham Lincoln. Did you know that?
No.
You didn't know that? Lincoln Logs were created by a man named John Lloyd Wright, who is the son of architect Frank Lloyd Wright, whose birth name was Frank Lincoln Wright, which was his mother's maiden name. He changed it later. Or no, his mother's maiden name was Lloyd. He was born Frank Lincoln, and when his son invented them later on, he decided to call them Lincoln Logs. There's your early morning trivia tidbit, everyone out there. Bet you didn't know that, but you know that now.
We do. We good. And now we can move on to some more important things here. Well, first of all, Dennis, before you start ribbing me, I owe you a lunch and a
You are
dinner.
so in debt. I don't even know how you're gonna get out of this debt. I'm owed a steak dinner now. I'm owed a Potbelly's dinner or Potbelly's lunch. You're just digging yourself a hole here. You're just like the Fed, Joel. You're just digging yourself a hole,
But
and you're just gonna have to keep printing money to get your way out of this.
but in
Keep printing
theory,
dinners. You just keep printing dinners on paper. IOUs. I keep getting these IOU printed lunches from you.
Soon the dinners are gonna mean nothing.
Soon they're gonna be nothing, and I'm just gonna look and I'm like, I'm actually getting nothing, no reward for all this at the end of the day here. I'm just getting IOUs on paper. Be like China.
but basically in theory, I was still right because the S&P's opened up
What do you mean in theory I was still right? Okay, stop. I gotta hear the explanation on this.
because the market was it was higher and you were all super bullish and thinking we're just gonna go up all day and the S&Ps are gonna go to 2,000 and
He likes to put words in my mouth there,
and
guys.
I thought
Get
they
the
were gonna
tape.
I thought there was gonna be a little bit of a rally, which there was. But basically, we own from the time we were talking, we only ended up a couple points higher on the day. So in theory, I was right.
You even tried to pull a fast one there because we closed at 4. The market closed at
Dennis,
4, and I was
when
like,
is the
and I
close?
looked, listen, the market closed at 4, and I was like, okay, it's over. It's at 1780. I win. He's like, no, no, no. It's the futures close, 515. So he's got to change it right away. I was like, come on. We were talking about the market, and now all of a sudden it's the futures close. So I had to wait till 515. I beat him anyways, folks. So I even gave him the extra hour and 15 minutes.
Dennis, when you
Couldn't
talk,
pull it
if we
off.
make a bet on Apple, okay, and we bet on the close, okay, when does Apple officially for
4
the
o'clock.
day
So
close
I
out
was
for
thinking,
trading? Okay,
yeah, but I was talking the intraday trading of the market because stuff can happen after hours. Who knows? Some major news could have came out after hours. That was just like a lottery ticket for you.
We're
when
going to
I,
have to
To
start
be like
drafting up
5.
written agreements
when
for you
when
guys
I
because you're
did,
pulling out fine print too much now.
and this is the
Gotta read the
no,
fine
this is
print
the
there,
final
folks.
word on this, and this is what I do. I'm going to count to
Judge
three.
Joel.
I'm going to say what it is. I'm going to count to three, and that's the end of the conversation. That's where I handle things in my family, and this I consider you my Benzinga family.
This sounds like a control issue. You have all girls. You never get the last word, Joel.
The market, when I do my levels, I don't do it on the 4 o'clock close. I don't do it on the 4:15 close. I do it on the official close, and the official close is at 5:15. So looking at the S&Ps today, we're trading near the high at 1281.75. Uh,
1281. Hey, I'm gonna buy that from you right now.
1781. My dyslexia is working again here. We got resistance.
Andalitis.
Yep. 1786 and a quarter Monday's high. That's your resistance point. The super secret number on the downside is the pre-market low of 77.50. That coincided with yesterday's intraday low and also the double top from Thursday and Friday. So as long as we hold 1777, Dennis's bull theory is still in control.
I love the super secret number.
Okay.
1781.75. So yeah, and I am still bullish here. I mean, every time we pull back, we find buyers. It's just the story. I mean, you got seasonality here. I don't see anything derailing it. Although we'll have to see what the Fed is going to say tomorrow. The 2-day meeting does start today, and you were giving a little bit of a hint that maybe Bernanke wants to go with a bang. What are you thinking, Joel?
Well, just basing this on, we were talking interest rates, and we're just talking about short-term rates, and we're just reading the tea leaves here, and the short-term rates are anticipating this. Now, is it going to be at this Fed meeting, or is he just going to kind of skate out the door and leave it old to Janet Yellen?
Hard to say, but we're going to find out some more, obviously, at 2:15 tomorrow when they do announce the results of this Fed meeting and see if we get a little bit of a taper or the hints that the taper is coming soon. That's one thing that obviously can move the market. So traded technically today, folks, traded technically maybe tomorrow morning. But after 2:15, if you got technical trades on there, you might want to take those off because we are going to move on fundamental news when that 2:15 analysis from the meeting comes out. Let's move on to some individual stocks. Facebook goes up every single day. It is up again today here, Joel. Video ads, auto-playing video ads in your news feed. I'm so excited to go into my Facebook news feed and see auto-playing video ads, aren't you?
Is there not? Well, I don't have a Facebook page. I mean, if I had a Facebook page, I'd probably have so many friend requests that that would shut down their servers. They would need to. Actually, Zuckerberg told me if I'm gonna get a Facebook page that to let them know, and they're gonna bump up their servers because they're gonna get so many requests. But my theory for Facebook, if I had a Facebook page, some old girlfriend would hunt me down and try and kill me. So I'm going to stay off Facebook. But looking at the pre-market high, we're trading right there right now, 54.86. Just kind of creeping up here. No one wants to short ahead of this. Right coming up to the all-time high.
We are at the all-time high right now.
Dennis. Look at that triple top there. What do you think? Trading up $1 in the pre-market here. Are you tempted to have that deja vu all over again?
I already did this once in the after-hours session. It doesn't show up on the chart, but I already tried shorting this all-time high here once, and it didn't work out well for me. So I'm learning here, folks. I'm learning here, and even after 15 years, I continue to learn. Can't short stocks when they're going up. You need to short them when they're going down. So I'm gonna wait until the stock starts cracking that 54.80 and it looks like it's topped out.
Or how about if it off the hop pops up through 55, goes to 54 and a quarter, and then comes back down through that 54.80 level?
Yeah, that's what I'm saying exactly that. Is if it pops up, makes a new high, get that breakout becoming a fake out or something, then I get interested in taking it down back through the 54.80. But somebody's lined up at 54.80 right now. I just saw there's 60,000 shares bidding at 54.80. That's a big pre-market bid for Facebook. Holy
That's
cow.
A bid?
There's 60,000. There's 46,000 on NSDQ there right now. And I think another 16,000 on Edge. So there's somebody trying to pick up 60,000 shares at 54.80 right now.
Do you want to take 30? I'll take 30.
I want to just smack them. That's the way we used to do it back in the day. Now I told you I got to wait till it goes up, give the shakeout through 55. Then maybe it comes back through. But how is this really? Okay, so let's just go back to the fundamentals here. Auto-playing video ads. Okay, so maybe they're going to make a little bit more money. Is this not, again, short-term gain for a long-term pain? I mean, how annoying is that going to be that you go on your Facebook and all of a sudden you got music come out and video and ads, not even having to click on them, they're just auto-playing at you. Well, that's going to annoy the crap out of users.
Wait, first of all, isn't there like a non-auto play? Like, can't you hit something so you don't see it?
I would hope so, but I don't know. That doesn't sound like and obviously this just broke last night, but they're saying they already had auto-playing videos in there, so they're obviously putting in auto-playing video ads now. So maybe there'll be some option where you can shut that off, but I hope there is, because that's going to be really annoying to just log into your account. All of a sudden, you've got ads coming at you, left and right for obviously, and always they're tailored ads too, because Facebook's smart like that. So like my wife likes photography, she goes on her Facebook page and it's all photography ads nailing her. So I mean, at least that's the one thing, there are tailored ads with stuff you like, but still, I think that's going to be annoying to the users.
It will probably have that little X, in the corner. So
Yeah, you
you
got to
get,
hunt the X down. You got to like find the X.
yeah, because they try and hide it. That'll be interesting to see. Like I said, I don't have a Facebook, so I'll have to let you guys, give me the outcome of that.
So that's what's moving here anyways. Facebook is up $1. It is trading at all-time highs here right now. Obviously, we're looking at that as, initial resistance here. It's been trading here since we've been talking about for the last 3 or 4 minutes, not moving from this 54.80 area. I do think we are going to see new all-time highs here in the regular session. I do think it'll probably take out 55, but I don't know if
You're really stepping out here,
that.
Dennis. It's trading up
Well,
a buck.
Joel, sometimes you step out here in that last 15 cents you try to get, and you can lose a lot in a hurry. So I'm just saying, I don't know if I'd be shorting on the way up, but on the way back down, I'm interested. So let's move on here. We do have
Did you talk about why it's up today?
the auto playing video ads.
I'm just joking. No, there was also a Susquehanna upgrade this morning.
Oh, is there an upgrade on it today?
Yeah.
I didn't realize that. So
From neutral to
Susquehanna.
positive.
So we even got that moving a little bit further.
Couple
too,
of
so.
factors today.
Couple factors pushing it up to new all-time highs. And what about that reversal on Twitter there yesterday, Joel? Did you see the chart on that one?
Yeah.
Got up over 60. A little fake out, 60.24, and kaplooey. The bottom falls out. We fall $5.
Well, Dan Niles came out who nailed the Facebook move. I think he bought that thing like in the 20s, and he nailed it. A very noticed analyst, and I can't remember what firm he's with, but he came out and he said he is short Twitter here. So it had a huge move, got over 60, going with our whole number theory here. You would have to take some heat because it went to 60.24. But you got a great formation now here, and I will call that a double bottom, even though it's 30 cents away, 55.45, 55.76. That is the absolute number Facebook has to hold. If it, or not Facebook, Twitter, same thing. As long as it's above 55, the split it right in the middle, and call that 55.60. That's the level. That's the level it has to hold, because there's nothing but air until you get down to 50.69.
Well, we ran 10 points in 4 days before that. So, yeah, it's all air below it for sure. So, takes out yesterday's low. I don't want to be in it either. Tesla still kind of marching a little bit higher. It's formed that nice base around 40 there. Had a little breakout day there 3 sessions ago. Then we had 2 days. Last 2 days, we've kind of consolidated here on Tesla. We're trading up 56 cents here today. Is this thing going to start making a run for 160 again?
Look at that. That is just a creeper rally, huh? After building that base of 140. That's a tough one because it made a lower high in the session, 151.80 down to 150.43. I mean, I don't think it's going to whoosh back up through it like it did, the way it went down through it, just because, all your, your people that were trying to pick bottoms here are under 130. They're going to be just taking targets just based on their algos or their program trades. So it's not going to quickly gain another $10, but you got nice support at the the split the two lows from Friday and Monday called 146.60. Good support and still good to go north, but just not exciting. Not the way it came off that 116 low. Pre-market high, folks, 149 even.
You know what other stock is really setting up here is this Amazon chart. We've had 1, 2, 3, 4, 5, 6, 7, 8, like 9 days of consolidation between 380 and 388, and it's just starting to sneak up and break out of that consolidation here today. Had a nice little lift yesterday, closing fairly strong, got up to 391, closed 388.97. Credit Suisse is maintaining their outperform on Amazon here this morning, but they're raising the price target up to 449. So 449, wow. So it looks here like they might make a run and try to make a run at that all-time high, which was 399 set back on December the 2nd.
That is an interesting chart. You know what that chart has written all over to me, Dennis?
What?
A strangle.
Yeah, you want to go both ways on that thing. Is that what you're telling?
Yeah. I mean, I'll probably just end up buying the 380 puts, But look at that. I mean, it's either gonna crack this 380 and go down to 370, or it's gonna get above that 390 level, which it did yesterday. Got 91.70 and then pulled back. But boy, that sure looks like another consolidation to move up to the all-time high here at 399. Dennis J3's popping in the chat room here, and he's asking if we checked it on Nanix's Twitter for the explanations for that Sunday night move in the S&Ps.
I read what Eric posted up
And what
there.
did Eric have to say? Because
He said it was definitely not a fat finger, and I think there's still everybody was speculating. I mean, they were on CNBC. Everybody was questioning what this was. Was this, just some huge algorithm that was just dumping stock? Was this a fat finger? Because we literally fell to 20 points in like 5 minutes. But he was also saying, thanks for posting up in the chat there too. JH3 just posted the Nanix link there too, if you wanted to go check out what Nanix had to say about that fat finger move. But basically, there is really no, obviously obvious explanation here. It was either somebody was dumping, like there's no doubt about that. Somebody came in dumping some major shares. But what he said, it wasn't a fat finger. Eric was saying, from Nanix was saying, because it didn't bounce back right away. It kind of, sold off and then consolidated for quite a while and then had the slow, steady climb back. So he said it wasn't a fat finger. I kind of agree with that. I think it was some institution come in and they were dumping big time for whatever reason. It's an oddball time to dump because we know liquidity is lower, especially on a Sunday night session. It was Sunday night, right? Yeah.
yeah,
On
yeah.
a Sunday night session when the market's just opening, there's not a lot of other vehicles that you can hedge with. So liquidity is just lighter at that time. So it's a difficult time, but whatever reason, somebody wanted out now, and they got out. And then they knocked S&P futures probably down 15, 20 points. I don't know if if it hit some stops or anything at that same exact time. But for the most part, it was probably one big guy who wanted out.
Yeah, well,
That's
you
what
know
I
what
think.
also it could be? It could have been just a big house or a big trader just making a big bet that's actually bullish. And they just knocked out the book, kept buying it in control. I mean, there are people that have enough that buying power. You were mentioning people dumping shares. Well, there's nothing open. There's no shares to be dumping. They were dumping the futures. And
Yeah.
they were dumping the futures, and it is possible overnight to someone have enough influence in something. If they just, I mean, the bids at night, I mean, I see them, they're like 50, 75, 100. If you have enough buying power, enough margin, because you can control this, this $70,000 contract for what, 5 or 6 grand? So if you have a couple $1 million account and you're trading these futures at night, I mean, it's a dangerous game to play. But hey, if you're a big firm or a huge individual trader, I mean, you can manipulate this market at night.
I think, yeah. Oh, yeah. If you're big enough, you can manipulate any market. There's no doubt about that. And you can obviously knock it down. But
And
often with painting the tape, you want it to go in your direction, though, right? Like, I
oh
mean,
no,
you're
not if
coming
you're.
in here selling it.
Oh,
You're
but
coming
what
in
if you're
here,
super smart though, and you're knocking out the bids, and you want to buy, there's some sell stops in the book, and you're going to hit it down to
so you're
1754.
saying they actually sold it off hard to knock all the liquidity, and then they were buying it all the way up and getting more. I don't know if the volume was heavier on the way up than it was down, though. That's the one thing. Can you end up buying more than you sell? This is all obviously we're getting into some crazy conspiracy theory here too. A
That's
little
what we're
bit.
all about. But before we move on, how about the juicy setup here in IBM? Jared just popped in here. And Dennis, we love these kind of formations here on the daily chart
I
here.
tell you, man, you're
Big
right,
day
Joel.
yesterday. Whoo! Big day.
That level it's bouncing off of too. If we go back into late October, we had multiple lows down there around 172.63, 173 call that area. Then obviously 2 days ago we put in a low at 172.73, and then yesterday on the kisser 172.73. That is your number, folks. That put in a hard double bottom off of an old level. This is classic level trading there for you, Joel. He loves his levels, and we had a classic reversal off of a double bottom. And you know what? That chart all of a sudden starts to look pretty good.
Right. Well, also you can look at it from that perspective. If you were buying it on weakness here, 178.35. What a huge level! Hit it yesterday. Hit 78. Back on the 6th. What's it gonna like? If you were playing this from a breakout over 178, would you just try and like buy it off the hop here and, probably put a stop down, 40, 50 cents? Or do you wait till it blasts through the 178 level?
Here's the tricky thing is that you know where it's got major support is down there at 172.73. You're now $5 because it was such an incredible rally for IBM. You're now $5 away from that. So that makes it tricky because you basically, if you buy this thing as a swing trade, you kind of got to give it down to that point again. I mean, that's the scary thing. But if you're thinking of just from a 2-day move perspective, and often you do see this happen, I'm a big fan of buying it as it's breaking out through its high again. So 178.35 was yesterday's high. If we can somehow get up there and take that high out, I think this could tack on and make a run for the 180, possibly higher. So maybe, you got $1.50 in there if this can take out the 178.35. If we get an inside day, then all bets are off too. But we do have, we don't have the Fed meeting till tomorrow. So you got one free day here of, trading this technically. I think you could get a follow through move here on IBM. I think you caught some people short.
One interesting note here for Jared, too. Pretty good volume yesterday, 7.5 million. That's the highest volume day since November 22nd. So if you're going with the volume theory move, in that direction, you do get it. Just the only thing that, and I know I should slap myself for this, but I'm just a little leery of the market here. I just don't like that move yesterday. And I just would be, this would be one that if we did tank through that 1777 level, you really have there'll be some stopping points between, 178 and 172.73, but that is just a vacuum area there.
Yeah, well, because it went straight up and took everything out. But I think you're going to see, I think a lot of people have been waiting for an excuse to buy IBM because IBM has been your stock that has lagged the entire year. Here we are at all-time highs or near all-time highs, and you bring up the long-term chart on this IBM, and this is basically approaching 2-year lows. It really was when it was back there at 172. People have been waiting for an excuse to buy IBM. The one ugly thing is the trend is not your friend here because the trend has been straight down for IBM. Every time this thing has rallied, it has found new sellers. 180 is a big psychological level, but I do believe you might get a little bit of fall through here because I think the psychology here is, oh, IBM's ready to go. I want to get in there. So we'll have to see. If we don't get immediate follow through here today, though, then all bets are off. But I want to see follow through, and I want to see it making and breaking out through yesterday's high 178.35.
And you gotta understand too, Warren owns the stock, and he can't wait till it gets to 170, and he's gonna buy a boatload of it. So, and just one other, since we're going on the Warren, Goldman Sachs theme yesterday, Goldman Sachs boosting ExxonMobil. I do remember when they downgraded this thing, and that was a good call. That was going back, I think, this big down day that we had back at the end of September. Goldman came out and gave them the downgrade. So they've been all over this one. It'd be interesting if they come out with some kind of upgrade or some kind of reinitiation of the coverage.
That was a crazy move in ExxonMobil yesterday, though. We were saying like it might open up a little bit lower, give you a shot. And man, if you're out the open off that you did get a shot, 96.15 or 96.13 is where it opened. That was right near the lows, and it went straight up, and I mean straight up. That is a crazy move for ExxonMobil, but it climbed basically over $2 in a matter of 10 minutes right off the bat. So just flew high, obviously was overdone, pulled back, and now it's kind of consolidated here. It's trading 97.02 right now. So you think the buyers come back in here in ExxonMobil again?
I wrote a little piece on this yesterday, and I mean, if you really have to be in this issue, I would look for the a little bit of the drift. You had the similar type move when Warren came into the stock. You came up, just missed the all-time high. You did come back and fill the gap very nicely here. Now you have the move up. You get the running start through the all-time high. Goldman Sachs pulls the trigger, bumps it up. So I'd be patient, wait for the $96 level. And then also when I was looking at ExxonMobil, I was looking at its brethren here, Chevron Corporation. And here's a stock, if you go to the weekly, busted through its all-time high at the end of 2012, right here, this area, and added another 22% up to its all-time high. And this is while ExxonMobil basically lags. So I mean, if you're looking for that kind of a parallel move here, I could put a price target of ExxonMobil at 115.
you think it's the long-term catch-up for ExxonMobil off the Chevron news? Because you look at those charts short-term here, and they kind of look funny because Chevron's going down, Exxon's going up. But I guess when you look at them long-term, like you were saying, Chevron was breaking out to new all-time highs, and ExxonMobil never did. So
I wonder how
this is kind
pair
of playing
traders are
catch-up.
handling this, because this is quite a reversal in the spread here between the
It's
two stocks.
it's been tricky in the pair trading world because a lot of relationships haven't been working as well as they have in the past. I mean, if you go back 5 years ago, stuff worked perfectly. You get ExxonMobil up a buck, Chevron's up a buck, or the equivalent percentage points. And it's just not working that way lately. Stuff isn't as simple as it used to be. Funny things happen, liquidity is lower, and things get pushed around a lot more than they used to too. Not middle of the day, but off that bat, like in the first 5 minutes of trade, we've been talking about it forever. Liquidity is so low that if you've got a position in something, you can definitely push it higher just by doing a little bit of buying. Or if you've got a big position in something, you can push it lower. So I do believe that stocks are being manipulated in the first few minutes of the day, and then all of a sudden it finds some consolidation, and then all the high frequency traders come in with their liquidity and kind of locks it in. So even like you were talking with the futures, knocking it down to buy it, sometimes that can happen in the equities in the first few minutes too. JH3 popping in with a couple questions. Did Dillard's pay a special dividend in December this year on their preferred shares? No special dividend ever on the preferreds. DDT basically it just pays its regular dividend, and I don't know when that dividend did go ex-dividend. I think it just did. When was it? There back in October, so it's going to go ex-dividend probably October, November, December, doing probably mid-January. I think it goes ex-dividend again. I think it's like 50 cents JH3. So we're just looking at DDT there, which is the Dillard's preferred, which I was talking about before. And it's starting to drift up. Like we said, the 25 is a pretty good floor for that thing because that's where it's callable. It's probably not going to really range much. You're not going to get much movement on a security like this. You're just sitting there trying to collect the dividend because it is callable right now. So I can't see it ever going up to like 26 or 27 because it's too much risk. The call risk is too high, but it probably hangs out and it continues around that $25 area. I think eventually Dillard's will call this in at 25, meaning you'll get the $25 plus whatever the dividend accrued is at the time, which is probably about 25 cents right now. So it's kind of priced exactly probably where it should be. So the
Fair
only
value, fair value.
yeah, it's probably right at fair value. The only wild card, and we were talking about this morning before we got on the show here, is the fact that interest rate concerns are out there a little bit now. They weren't there in existence a year ago, and they are now. If you look at some of these REITs, like look at these stocks like NLY, look at these stocks like AGNC, look at these stocks like CMO. Well, CMO hasn't been a bad one. That's a bad example, but MITT. ARR, all these things basically are REITs. And what these companies do is they borrow short and they invest long, obviously in property and different things. So as short-term rates climb, these companies get squeezed. Their margins get squeezed major. And what happens is these things basically pay out pretty much everything they make in the form of in dividends. And if you look right now, the yields on all these things are like, holy cow, that NLY yielding 14.2%. It looks like, wow, that's awesome. I can get 14% of my money. But is that 14% yield going to stay? Because if their margins are getting squeezed, they're going to be making less money, meaning they're going to be able to pay out less, meaning obviously that yield's going to come down. So there's concerns here, and this is telling me there is concerns about short-term interest rates going higher here and squeezing these companies, and that or interest rates going higher in general. And we know obviously the Fed's been leaning towards tapering. They're not really doing anything with rates yet, but even looking at the TLT, rates have been climbing though. Short-term rates have been climbing. So, and it is squeezing companies like this. So going back to the whole preferred thing, if rates were to really start climbing, and I mean you'd have to really climb because the DDT is a 7.5% yield, it's still attractive even if rates go up 1 or 2%. That's still an attractive yield. Then some of these securities, some of these preferreds, and some of these other things could start getting hit a little
Simple
bit.
question though, Dennis. Don't these companies hedge against the interest rate risk? I mean, don't they have enough money in their portfolio that they can have, some
No.
kind of hedge? No.
No, they don't hedge much. I'll be honest with you. A lot of these companies do not hedge that much. They're basically levered very high. Like that's why if interest rates were to go parabolic and really start climbing, all those companies would be out of business. But that's not. I don't see that happening here. I think interest rates are climbing and squeezing the rates a little bit. And these things probably yields are going to drop because they're going to have to cut the dividends because they're not going to make as much money. So no, I don't think they hedge as much as they should. And that's the one issue that a lot of these companies are going to have. Now, Dillard's, and you're talking preferred stocks, that's completely different. Like Dillard's, you can look at the underlying company DDS. That thing's up at all-time highs. That company is fine. There's no way in the world, that preferred stock is cutting the dividend. So that's completely safe. That's why I don't like buying, coming and buying these REITs and stuff right now because of uncertainty. But some of these preferred stocks, and if you look at the underlying company, if the underlying company is pretty good, then the preferred, I'm interested in. I know Dillard's, DDS, you can look at the company and the stock. DDS is at all-time highs, which is telling me the company is pretty sound. That means that when you got a 7.5% yield on a preferred stock,
They can
I
pay it.
think it's kind of safe. Yeah, they can pay it. That rate is not getting cut anytime soon.
What
And the
about
only way you can cut a preferred dividend is if you cut the common dividend too to zero, because preferred dividends always, and the Dillard's dividend's pretty small. So
and
I think that's
along
pretty safe.
along these lines, you get a company like Coca-Cola here. Jared's asking about that, and you mentioned that to me yesterday about the Coca-Cola and the triple bottom there, and
Yeah.
the triple bottom coinciding with the low that you had at November 5th here. Now, what I don't like about it is when you get that kind of formation and you can't distance yourself from it. You can't make. You only close 7 cents away from it. So you got to treat it, with respect as support here. But this is going to be, the fourth time down in as many sessions here. I don't know. You got another low at 39, of course, with the institutional bid here. But what do you think about that? And if you're a long-term investor in Coca-Cola here, is it time to perhaps shift out of this?
Um, this is another one that's lower beta stock, somewhat interest rate sensitive because they got a 2.85% yield. And like I said, they've been kind of whacking everything that's lower beta. And basically people are owning it more for the dividend thing. So it's somewhat concerning here. I think, from a technical perspective, pure technical short-term trades, takes that 39.18. There's a triple bottom there. And, obviously it can, there's a lot of air below there. Maybe you do get a little positive 39. So there's still support until it's broken here. Long term, I'm not that concerned about Coke from like a fundamental perspective here. It's not like you're sitting on Coke and it's run up, like some of these ridiculous things. Some things have just been running, and you got huge gains you're sitting on. Coke really, look at the chart from the last couple of years. I mean, it was $35 2 years ago. It's $39 now. I don't think this thing's going to wash out and all of a sudden go to $30 or something. I think a pullback here, if you pull back to 38 or 37, that could happen. But I don't think, everybody's going to run for the exits on a stock like Coke.
It'd be interesting to see the reaction if Warren exits the stock. I mean, if he's just looking for the yield, it's there. But
Does Warren ever exit stocks?
no, that's right. But no, I mean, I guess to give it a little better explanation here, a close under 39, I think, would be concerning here. But as long as it's a stable holding that $39 level, we'll see what happens. See if there's any institutional bids here. Let's move on to some of the upgrades and downgrades. Chelsea's piping in here about Hewlett Packard. Was that an upgrade or a downgrade, or what's the news on HPQ?
JP Morgan upgrading Hewlett Packard here this morning. I'll tell you the big number in this one, my big whole number, $28, 100,000 shares up there in the book. It's a 27.64 right now. If you get another 30 cents, I think you're going to run into all kinds of resistance in the high 27.80s and the 27.90s as all those high freaks lean on that $28 level.
Moving up here, you did get over the $28 level. The recent high.
Did you?
Yeah, the recent high. Well, no, I'm not.
Oh, I thought you meant
talking
overnight. Okay,
no,
sorry.
Dennis. Sorry, didn't want to get you excited there. Overnight high, 27.70, only trading 4 cents above that. Going to the daily chart here for Hewlett Packard. You got some highs. Let's see here. We are trading at the December 9th high at 27.68, but then you sneak into the 28 handle, a double top at 28.11, 28.18, and then the recent high of the move at 28.70. What was their justification on this? Was it that they're getting into 3D printing?
Brent, do you have the actual, maybe we could get Brent to just go jump into that here. I'm looking at the Benzinga Newswire too to see if we do have the actual upgrade. Price target raised to $35. from neutral to overweight. I don't have the report in front of me here though.
Let me pull it up real quick. Give me a minute here,
We'll
fellas.
give Brent a minute and he'll
Okay,
go dig
thanks.
that report up and find you the details. But they're raising the price target up to $35 here. So Hewlett Packard still moving up. We'll bounce over to another one here. Just while Brent goes hunts that down. Adobe ADBE getting upgraded at Argus here this morning. That's an interesting chart there, Joel, because look at that stock from the last couple of days here. It's
Yeah,
had some crazy ranges.
yeah, they need to come out with some more bad news. Right? Didn't they come out with like missing every quarter for like for the next 2 or 3 years,
Is
and
that what
then
it
it,
was? Yeah, and
yeah,
then it went up, and then it ended up going up.
yeah. I guess I would just let this puppy ride here as long as it stays above the $58 level. That was the low. When they had all that good news on Friday, 58.06 open that day, tick 58. It was off to the races. Pretty good volume on that day too, so people getting some new positions on. 61's the level though on the upside. 61.09 was your high on Friday. 60.88 was your high on Monday. So someone's targeting that $61 exit, $61 level to exit shares of Adobe.
All right, I got some details from the J.P. Morgan note. It was Mark Moskowitz, pretty notable J.P. Morgan analyst. He said he's expecting some upside to HP's forecast for fiscal year 14 free cash flow. He sees 8 billion in free cash flow as within reach. Also cited a PC market which seems to be stabilizing and a printing market where declines may be easing.
Okay.
Couple little tidbits.
Okay, thank you, Brent.
Boeing here also flying again. They are doing a $10 billion share repurchase, and they're increasing their quarterly dividend from 48.5 cents to 73 cents. So Boeing is up over $3 on this news here, Joel. 137.80 just ticked up to, closed at 134.72.
Yep, I heard this breaking on the Benzinga news desk yesterday. What I find interesting about this chart is the initial spike took it up to 138.20. And then a few times this morning, traders have tried to take it over the 138 level. A couple failed attempts at 138.15, 138.20. And then if you go to the daily charts here to take a look here to see if there's, when I see pre-market highs and lows, a lot of times I like to go to the daily and see if I can find any kind of confirmation that this should be a level. And I go back to the 19th of November. You had a high at 138.79, and also the all-time high close for this issue 138.36. So I see some resistance right where it is in that 138 handle.
All kind of news just breaking about 5 minutes ago from 3M here. MMM raising their quarterly dividend from 63.5 to 85.5, so a nice raise in the quarterly dividend. They're affirming LT sales and earnings growth targets. They see full year earnings per share 730 for fiscal year 14, 730 to 755 versus analyst estimates of 740, so kind of at the higher end there. Also seeing expecting 2013 to 2017 EPS growth 9 to 11%, organic sales growth 4 to 6%. So all kinds of updates for 3M. The stock is trading up $3.50 right now on all this news that just hit the tape.
And let's give our hats off to Nomura Securities, who last
yeah.
got to
Good
give
call.
hats off to those analysts. And by the way, folks, stick around here in a few minutes. We're going to have Michael Pachter of Wedbush on to analyze his social media stocks and electronic stocks. So he's going to be on. But we usually give the analyst a hard time, but did get that Nomura upgrade of 3M last week. We got a nice boost off that level. Now it gets kind of tricky here. You really don't have any resistance until you get to the 132 even high that you had on December 2nd. Pre-market high, we're sitting right there right now, 131.12, Dennis. But boy, look at the volume on this move. Does this make you a little skeptical? 6,000 shares?
12,000 now. It's pretty light, but I mean, still, you got a $130 stock here, so it's not like a $30 stock. So obviously that, volume is a little bit more significant. 3M never is one that comes and trades millions of shares and pre-market there just because it is a $130 stock. So no, I'm not that skeptical. I mean, it's all good news here. I mean, the whole 130 area, you wonder if that psychological level is going to have a little bit of play here. I know we're ticking up to 130, 110 right now. I see about 10,000 shares at 130, so it's not enormous. So that could be a level that might hold down the open a little bit here, though. But it does look like this is going to move up significantly. One stock before we get to Michael Pachter there, Herbalife. We have not talked about Herbalife here yet, and it is flying. Last night it was flying. After hours it is flying. Brent, do you have the details there on the Herbalife? I know
Sure
they
do,
completed
Dennis.
their audit and it was good
Yeah, they halted the stock. Let's see, what time was it?
after hours last night. Yeah.
Was it after hours? Yeah, I think
Oh, okay.
it might have been right before the close. But anyways, yeah, the company saying that their audit is completed. I think it was fiscal year 10, 10, 11, 12, or was it 11, 12, 13? No, it must have been 10. 10, 11, 12. And then Carl Icahn did get on CNBC saying he's never doubted Herbalife, saying he still believes the stock's undervalued. I think he went on Bloomberg shortly after. But then Bill Ackman got on the wire saying he maintains that the company is a pyramid slash Ponzi scheme, says will be shut down by regulators, did get an official statement from Pershing Square, said it is not the role of Herbalife's auditor to determine if the company is a pyramid scheme. Rather, that determination depends on whether distributors earn more money recruiting new distributors than from retail sales to consumers who are not distributors. Bottom line, literally the last line in that Pershing Square statement, Herbalife is a pyramid scheme that will be shut down by regulators, reiterating what Ackman said on, I think it was Bloomberg.
He is sticking to his
Sticking to
thesis
his
there, and
guns.
he is not deviating at all. Despite when he came out, the stock was like a $40 when he started shorting it, and now it's up here at 74 or $76. And holy cow, I'm glad I'm not short this thing. But obviously he's sticking to it. He's sticking to it.
Yeah, I guess he's doing it a little bit more with the options as opposed to shorting the stock. I thought I heard some
I think he's
rumblings.
got a huge short position too, though, doesn't he? What does anybody know what his position is? I know it was huge. It was a huge short position too in the stock as well, wasn't it?
77.29 is the high that we've hit in the pre-market. Looking at the recent, this is blowing away the recent highs in the move. That high is at least. You did have a double top up at. Well, you did hit 77.29, so it must have been halted before the close, and then they
Yeah, they
reopened it.
reopened
Yeah.
it. So it halted here at just looking here. It halted actually at 319. And then they came out, they said from the audit, the re-audit, that everything is fine, no material changes. Stock reopened, and that's when it got the huge pop. So if you look at the intraday chart,
Okay.
basically
Yep.
went from like 71 to 77, then it closed. And then after hours, all this stuff where you've got the Ackman statement, you've got Icon coming on, and he still thinks it's undervalued. And then you've got actually D.A. Davidson this morning. They are raising the price target up to 115 on the stock here. So it's trading up another buck here in the pre-market.
So it hit that high yesterday before the close at 77.29, and now you have that seller out here again this morning at just above the $77 level. You just got to pop at 77 a quarter. So if you absolutely have to find resistance in this stock and need to sell it or short it, or your target 77 and a quarter, 77.29, that's the area to keep an eye on. Still a buck away from there.
Well, 1782.25, we were drifting up slowly here, Joel, on the S&P futures. Tight 5-point range. We had the big 20-point range or 25-point range yesterday when we were talking pre-market, but the action's kind of muted here today.
Right, good to go north as long as we hold that 1777 level. Next area of resistance, Monday's high at 1786 and a quarter. Kind of opens up after that, but what do you think? With the Fed meeting, a 2-day Fed meeting coming up, getting some pop off the lows. I think it'll be a tepid rally, even if we can get above that 1786 and a quarter.
Yeah, I think you'll be quiet here ahead of the Fed. I think a lot of people will be jockeying their positions, obviously, getting ready for whatever's going to be said there tomorrow. So you often do see these days ahead of the Fed, the trading action is a little bit muted.
Okay, well, we got a very special guest coming on. We have Michael Pachter, research analyst at Wedbush Securities. He is an off-quoted video game, social media, digital media, and electronics analyst with Wedbush Securities. So we are going to take a quick break here and be back with Michael Pachter. Welcome back, traders and investors. We have Michael Pachter, research analyst at Wedbush Securities, on the line. Michael, how you doing today?
I'm good, thank you.
Before Dennis says hello, I know a Rabbi Pachter. Do you have any relatives in the Michigan area?
There are two big families with that name. One settled in Chicago and one settled in New York. So I'm from the New York side. Probably not related.
Okay.
Although my great grandfather was a cantor.
Okay. All right. So there's a parallel. Dennis, you want to say good morning to Michael?
Hi, Michael. How you doing here?
Good
I'm gonna
morning,
be
good.
very interested to get your thoughts on Facebook here today. With I don't know if you saw the headline going by, but they're gonna put auto playing video ads into their
I have to
news
say,
feed.
we're actually going to transfer coverage of Facebook, LinkedIn, and Twitter from me to one of my colleagues
Okay.
effective today. So I'm happy to talk about it, but it won't be too relevant.
Okay.
Okay. Just going back, how did you end up in the video game, digital media, and electronics sector?
Oh, I'm a ridiculously old guy who had a, I don't know, 18-year work history when I came to work here, and I had been variously a tax lawyer and many different finance positions, and I ultimately ended up being a M&A investment banker, and was unemployed due to just a ethics disagreement with the guy that I worked for. So I found myself without work, and a friend of mine connected me with Wedbush, who was starting up a research practice, and I ended up actually heading up the department and kind of staffing it. And one of the people I hired to cover games was really good at it, uh, and left in 2001. And I thought that I could step in and take over his coverage. He hadn't been covering that many stocks, so I picked him up because I'm kind of a lifelong gamer, and at the time it seemed a lot simpler than it turned out to be. And after a couple of years, I realized I was pretty good at it, so I stopped being director of research and started focusing full time on being an analyst. And serendipity, I mean, I kind of expanded from games to other things, primarily because in 2000, Bill Gates articulated his vision for connecting everyone to the internet through their living room and having the Xbox be the internet hub. And I think he probably had grander aspirations thinking about e-commerce, flowing through your TV. But it was crystal clear that if you had a functioning PC attached to your television and connected to the internet, you could at a minimum consume entertainment. So you could consume games for sure, and music and movies. And so I started covering companies that provided those types of services, and I now cover Netflix and Pandora and LinkedIn, and I actually cover a bunch of companies that I think will ultimately be put out of business by that digital threat. So Best Buy and GameStop, who I actually like, but I think at the time I thought they might go away. Amazon, who's a participant in that whole process.
So it's interesting. You mentioned that you were a video gamer as a kid, and you mentioned that you're old. I'm probably I'm older than you, most likely, and like the
57, 57. I'm sure you're not older than me.
Okay, all right. Well, I'm up in that. Up in that area, but the video games they had when I was a kid was like pinball and Pac-Man and asteroids. I remember on those pinball machines, that you could you could play them, and if it looked like you were gonna drain, you could hit the thing real hard, and a lot of times I tilted it, and then it took away all my points. But were you a video game? Mentioned you were a video gamer with a kid. Was it like what Pac-Man,
Well,
pinball,
I certainly
asteroids.
I certainly played pinball, with real balls in actually the bowling alley, and my parents thought I was there to smoke, and I was actually there to pop quarters in the arcade, the pinball machine. And I remember actually seeing Pong in '72 or '73, and I was in high school. I remember, for example, the day that John Lennon was killed, which was 1980. I was at a pizza place, and I guess I was 24. I was at a pizza place playing asteroids. I totally remember exactly what I was doing when I heard him that he was killed. So yes, yes, and yes. I played Donkey Kong. There's a great documentary called A Fistful of Quarters about the world's champion Donkey Kong player. Hilarious and serious but hilarious video. And I wasn't that good, but I was pretty good. And I played Galaga and Galaxian and Defender. I played all the original, arcade games, Mortal Kombat. And then I bought every console made. So I think my first one was I had an Atari 2600 in probably the late 70s, and then I had a Nintendo Entertainment System in '85, Super NES in '90. I bought the N64 and the PlayStation 1 in '97 and '95 respectively, and then I've owned every console, and I've had the Dreamcast, the Genesis. I like games, and fortunately, tolerance for adults playing games has grown in the last 30 years. I was like the oddball kid, and my parents gave me grief for not doing something productive with my time. It turned out, worked out okay for me.
So when you play these video games and you find one that you really like, do you look at the company then, as potential to obviously buy the company, or just curious how your thought process goes?
No, as far as stocks, no, I'm definitely not a game reviewer, so
Okay.
my taste is kind of irrelevant. I just genuinely like games, and so I think my affinity for them it causes me to actually it caused me before being an analyst to actually pay attention to exactly what they do, how they're made. It's sort of like being a political junkie. Like I know everything about, I voraciously read about politics. I have no intention of running for office, nor do I want to change policy. I just think it's fascinating. I was that way with games because it's something I have an affinity for. So no, there are fortunately hundreds and hundreds and hundreds of review sites, so it's pretty easy to figure out if a game is good or bad. And I think this is accurate. I think that the video game industry is the second best covered industry by the media after filmed entertainment, and probably better covered on the internet than filmed entertainment. So there are more people writing more words about games than anything except movies, and I think probably more on the internet than in any industry, than covering any industry. So there's a ton of information out there, and it's really easy to find.
Now, you mentioned off the hop that some of these companies obviously are starting to struggle here as stuff more goes into the cloud, as stuff more goes on the internet. And you actually mentioned Best Buy, which I just found interesting, that you were saying that Best Buy may start to struggle here too. What's your thought process there?
Well, I have a sell on Best Buy, and it's really because I think that the steamer is not only heading for the iceberg. I think it's hit it already, and I think that the captain and the CFO, so the CEO and the CFO, are bailing water with a bucket as quickly as they can, but the ship is taking on more water. I just don't think investors have figured that out yet. I mean, the truth is, Best Buy's media business has been dying for years, and I don't think that anybody even talks about it anymore. But the sale of DVDs and CDs and games have been in a state of persistent decline for the last probably 8 years. and they've comped negatively in those categories for literally probably 8 years. That's just never going to turn around, and I think everybody appreciates that. I do think that there is an onslaught from the bottom, not from the top, on their business, because I think that as consumers increasingly avail themselves of internet retail, they will buy kind of brainless purchases, not the ones that take a lot of thought like a television, but brainless purchases like batteries or iPhone cases on the internet. And so I think that Best Buy as a destination for far more trivial, routine purchases like the car charger for your phone when you get your new phone, they're losing traffic like crazy, and it's because internet has made it so easy to get that stuff. Amazon recently put out, this is a classic Amazon statistic, that they added millions of Prime members in the September quarter. They would only confirm that millions was plural and it meant 2 or more, and they won't tell you if it's 10 or 2.1. But the point is that Prime has been around long enough that if they added 2 million in a quarter, they're very likely at something around 20 million. And they could be 30, but they're up there. And if there are 20 million people, likely 16 million or so in the U.S., so literally 15% of households with a Prime member, those people aren't buying batteries or print cartridges or Halloween candy or anything routine at retail any longer. And Best Buy is probably squarely in the sights of Amazon. If you think about Amazon's product mix, I am certain that the largest category at Amazon is the consumer electronics and home entertainment categories. So Amazon carries every single product that Best Buy carries, except for the white label Best Buy branded, Dynex brand or Insignia brand. But they have comparable products at significantly lower prices. And my personal anecdote, I literally just got an iPhone 5S about 2 weeks ago, and I got it at work. So all I got was the phone in the box, and it comes with a cord and a set of earbuds. So I bought a case, I bought a Mophie charger, I bought 3 Belkin 2-port car chargers, which I highly recommend for anybody who has multiple phones in the household, because you can plug in 2 different cords and 2 different people can charge at once. Everything I bought was significantly cheaper than on Best Buy. And although I know that Best Buy would match price, why would I bother? I'm on Amazon. I'm a Prime member. All the stuff was going to be there 2 days after I got the phone. I could manage not to drop my phone for a day, and I did have a charging cord for the first day. And like clockwork, 2 days later, that package arrived. The Mophie charger was $91 versus $119.99. The Belkin 2-port chargers were $13.15 versus $24.99, and so on. I mean, there's just no reason anybody who has that kind of an experience on Amazon is ever going back to Best Buy for those products. So I think Best Buy is going to see probably over the next 2 or 3 years about a 10% decline in its traffic. And that might not equal a 10% decline in revenue, because I think these are lower-end products. Probably more like a 3 or 4% decline in revenue, but it's the highest margin revenue. If I bought a Belkin charger for $13.15 and it's $24.99 at Best Buy, certainly Amazon didn't sell it to me at a loss. Certainly they probably bought it for 10 or 12, but Best Buy is losing $12 or so of profit, and that's going to bury them. I literally think you're going to see Best Buy gone in 5 or 6 years.
Wow.
So Dennis and I mean, we're technical traders, but we also like to pay attention to the fundamentals. And you have a company like Amazon that just has this outrageous, valuation. How do you approach stocks like that? I mean, correct me if I'm wrong. Have they ever made money?
It's a great question. Yeah, Amazon has made money, and actually relatively consistently. The problem is they don't make very much money. So, back in 2010, when they had $34 billion of revenue, they made about $1 billion in net income. They made, high $2, $2.50 or something. Now they're doing this year $75 billion or $74 billion in revenue, and they're making something like half that, $500 million in net income. So they've managed to grow revenue by $40 billion, and their net income has actually gone down. And so I understand why fundamental, investors look at that and say, why is that good? I think the point is that the 34 grew to 74 and is widely expected to grow to 90 next year. So that giant growth in revenue, it most definitely is throwing off gross profit. And Amazon has taken that incremental roughly $10 billion of gross profit that they've thrown off, and they've reinvested it in many, many things. I mean, one thing, $1 billion or so of that, is buying streaming content for Prime members. And we can argue about whether that's smart or not, but they're doing it, and that makes the Prime membership more valuable if you're a Prime member. Another big chunk of that is the subsidies that they offer on Kindles. And we can argue again about the lifetime value of a Kindle owner, but Amazon has concluded that it's worth subsidizing a Kindle by $50 or so. I think they claim to break even on that business, and maybe that's with all the book downloads. But I have a feeling that's where a big chunk is going. Then the last giant chunk is going on infrastructure, which is web infrastructure, Amazon, to build Amazon Web Services, and distribution infrastructure to expand their offering to everyday products like groceries. And again, I don't think they're going to make a ton of money on these product categories in the near term, but I think one day when they suddenly just stop spending, all that incremental spending drops to the bottom line. So that $10 billion in gross profit they spent, if they revert back to just running the company the way they did in 2010, assuming that it doesn't hurt their revenue, just assume they don't grow any longer, they're going to make $10 billion more, which is something like $13 a share. So stock's trading as if they already make that, and I get that. And I
gotcha.
I have a neutral. I have a true neutral because I actually think it's hard to start a position here. But it wouldn't shock me in 5 years if this thing was a $1,000 stock.
Wow. So will other companies benefit if everybody keeps moving from like going and driving to Best Buy? If they're all going to Amazon, will companies like a FedEx and UPS continue to benefit from stuff like this too? Because I mean, people have to ship this stuff, right? Or is there other companies?
I think that's right. I mean, one of the things Amazon's building out, because of groceries, is its own delivery, capabilities. So they actually have trucks. But yes,
Oh, wow.
You're absolutely right. For the small stuff, when I buy my car chargers, they come in a little box, dumped off by FedEx local or UPS
Not
local.
by a
So
drone?
sure,
Not by a drone?
not yet. No, I think the drone thing sounds really cool, but the FAA regulatory process. I know that Bezos said it would be at least 2 years. I think the FAA regulatory process is going to take 10. And I really think the real problem with the drones is the novelty to a kid, with a BB gun. I mean, I just think that's a problem. I mean, they're potentially a hazard. I do think ultimately the drones will be just like pizza delivery. So you can order something by drone if you're there when the drone shows up, and I think that would make sense so they can very safely, you can kind of coax it in and turn on your phone or something so it's got a GPS locator. But other than that, I don't know. But it'll be 5 years or more, I think.
Now you cover LinkedIn too, correct there, Michael?
For another hour or two, yeah.
Oh, yeah, you're moving them. So, well, let's get your last thoughts here on
LinkedIn,
some of these.
Facebook, and Twitter.
Let's get some of your last thoughts here then on some of these social media stocks here, because everybody always asks us questions on the Facebook and the Twitters and the LinkedIns. And again, it's a valuation thing here. It's difficult, obviously, to look at these from, traditional methods of, earnings and stuff to come up with values. How do you approach it?
It's funny. Twitter has something like 1/8 the revenues or so, depending on what you believe in consensus forecast for next year, and no profits, and is trading at about something like a quarter of the value of Facebook, and Facebook is immensely profitable already, and they're growing really fast. So there's a mismatch there. I think that if Facebook were valued at Twitter's valuation, it would be over $100. It's hard for me to tell you that Facebook's worth 100 and Twitter's worth what it's trading at. My target on Twitter's 37. So I think Facebook, logically probably trades up another $25 if Twitter stays in here. So I like it a ton. LinkedIn is really kind of it's an odd stock. I mean, it ripped from 100 to 220 220 or 250, I guess it peaked at in April, and it really hasn't done anything since. I mean, the market's up a ton since April, and LinkedIn hasn't budged. So I think what LinkedIn is beginning to show is signs of slowing growth. I think the interesting thing about LinkedIn is that they have a great business and a flawed model. And when I say that, the people who posted resumes there aren't going anywhere. It's the only legitimate place you can actually look for work, and your employer doesn't care because it's monster.com, but it's cast as a social network where we're networking and meeting people. Nobody I've ever met actually meets anybody on LinkedIn, but everybody's on it in case they need a job. Where LinkedIn screwed up is they chose to charge a subscription fee rather than a success fee. And so if you are a recruiter and you place one person a year and you get a $25,000 commission, maybe you won't pay or $10,000 a year in LinkedIn subscription fees. But if you're placing 25 people a year, of course you will. And the point is that LinkedIn charges the bad recruiter and the good recruiter the same amount, and that's just stupid. They should have variable pricing based on how successful you are, how frequently you use it. And same with companies who are employers who are looking for talent. General Motors pays the same, for a site license, and Facebook pays the same for a site license as the mom and pop grocery on the corner who hires one person every 10 years. So they need to make it really variable pricing based on use, and I think that the opportunity is several times greater than the market is priced in.
Mike, what about Facebook? I mean, obviously they're moving into the advertising arena, but last quarter when they released the metrics on their users, there was a really decline in the teens and the teen loss problem. Do you see that being a sore thumb for the company going on down the line?
I think probably the biggest problem with Facebook right now from an investor perspective is the CFO is not very articulate. What he said was that teen usage was flat. And he said we saw a decline at the younger end of the teen range, and he didn't say this, but if you have a decline at the younger end and overall teen usage is flat, that means you had an increase at the higher end. And of course, he's not articulate enough to have actually made that clear, and the stock got crushed after that call. But the truth is that you don't need Facebook when you're living at home and every single person in your universe goes to the same school as you and you see them every single day. You need Facebook when you're us and you've been out of college for 35 years and you haven't seen any of your friends for 25, and it's a really easy way to reconnect. So Facebook was invented by corny college kids who wanted to know who that girl from Michigan was sitting in their class, and it expanded to other campuses because every kid at Harvard on Facebook had friends at other campuses, and it spread virally among the adult population because we all have friends that we haven't seen in a long time. So it's a great way to reconnect. All adults get that. Most teenagers don't, and for some perverse reason, investors are completely clueless about this thing, and they hang on every word of what the CFO says, and they think just like I would tell you at Best Buy, if no teens went to Best Buy, you would agree it was dead forever. They think, oh, teens aren't using Facebook, therefore Facebook is dead. That is stupid. When teens move out of the house, they will join Facebook because there isn't an alternative that actually works.
Michael, just to bring you off to Facebook, what stocks do you think, just to kind of finish it up here, what stocks do you think that you cover that are the most undervalued right now? Because we've had such a run in the market, and I get this question all the time. It's like, has the market gone too far? Is there still value out there in some stocks? Like you mentioned Facebook, you think there's a lot of value there. Is there other companies that you are looking that are really undervalued here right now too?
Yeah, there are. The game guys, when you look at historical game valuations, the publishers, they've traded at a premium to the S&P 500. And back when I started covering them, there were 11 public companies. There are now 5 that are real. I mean, Nintendo is a hybrid, but there's Activision, Take-Two, Electronic Arts, Ubisoft are the 4 big ones, and there's a smaller one. But those guys, there are fewer of them. The market opportunity is every bit as great as it's been in any cycle, and they're trading at a discount to the S&P 500. So I'd say if you just get a reversion back to kind of mean relative values for the group, they're going up 25%. And I think that with a greater concentration with consolidation in the group, and it's really been through other companies going away. But with consolidation, I think the opportunity for the survivors is even greater. So this console cycle is going to be a big deal. I think Activision's got at least 50% upside in the next 2 years. I think EA is a double in the next 2 years. Ubisoft is coming off of a screw up, and I think they're probably 50, 60% upside stock. The one that's harder to peg is Take-Two, because they had immense success with Grand Theft Auto. That's impossible to replicate, and we have no clue what else they're working on. The management team is not particularly forthcoming with the release schedule. I can tell you every game that Activision and EA are making next year, and I can only tell you that Take-Two's making a basketball game. They have not announced anything. So it's hard. It's like valuing a movie company without knowing what movies they're going to release.
Okay, you made a statement, I believe you did, that by 2050 that all video games will be streamed from the cloud. So this probably leads to your bearish thesis with the retailers. Are you sticking with that? And what companies do you think that will benefit from games being streamed on the cloud?
Yeah, there will be physical media as long as there's demand for physical media. So it's hard for a publisher or to say we're not going to allow the consumer to purchase a game in physical form if he wants to. And just to point out that Napster, Grokster, and Kazaa in 1997 destroyed the CD business, except that CD sales were 200 million units in the U.S. last year. So they're still 20% of where they were at their peak, and the idea that we still not only have CDs but they sell hundreds of millions of them is kind of crazy. So maybe games will still be made if there's still demand and the publishers think they can make money, but it makes eminent sense for the publishers to cut out the console manufacturers, not pay a royalty there, cut out the retailer, not pay a margin there, and deliver games directly to the consumer. And I think physical retail is going to be challenged. I think physical retail essentially goes away unless they meet one of two really important criteria. One is that they sell you something that you can't get online. So that would be a specialty retailer like Abercrombie and Fitch, who makes their own products. And the other is that they provide some type of service that you can't get online. So the easy one is paint matching at Home Depot. You just can't figure that out online. You'll never get it right. So you will go there and buy paint. And, obviously in the service category, you can get things that are so big like lumber that it doesn't make sense to order online, or a sofa that you must sit on before you buy because you're not going to buy something that's uncomfortable. So that's where Best Buy hopes to be saved, that you have to see a TV before you buy it, except that's just old person's logic. You don't need to see a TV before you buy it because you already have to. And so the third one, you know how it works, and if it's the same brand, you know what it is.
Yeah, it'd be kind of hard for a drone to deliver lumber to your front door too, right?
Yeah, 5 pound limit on that. But like, it could have delivered my car chargers.
Okay, it could. Just looking at the whole gaming arena, to me, it seems like a high percentage of gamers are male, and there's a whole female population out there. Are there companies that are trying to appeal to female gamers, or is it not a factor?
There's three groups of gamers. The console market is 250 million people, 260. So big, and yes, mostly male, probably 75-80% male. The mobile market is 1.5 billion large, and that's probably split right down the middle. And then the internet market, which would pick up social games and super hardcore online games, is 2.5 billion, and that's also probably 50-50 because social is dominated by women and hardcore is dominated by men. So I think that when people say the gaming market is largely male, they're talking about super hardcore dedicated console purchasers who say, I'm spending $500 on hardware just so I can play games. Of course that's a guy. But I think that the mobile market is definitely sex indifferent. I mean, they don't care at all, gender indifferent. Who's playing what, and those games are actually getting more and more and more sophisticated. And tablets are giving people a much richer experience because the screen is so big. It's intimate. It's on your lap. You can actually see everything, hear everything. So yeah, the guys in mobile that are dedicated are Glue Mobile and GameLoft. Neither of them has really figured out the formula, so it's hard to say that they're going to really thrive. EA is larger Electronic Arts than both of them in mobile, but the guys who make the most money are one-hit wonders. So it's Gung Ho with Puzzles and Dragons, which is a public company. It's Supercell, with Clash of Clans, and they're in Finland, just sold half their company for 1.5 billion. That's 20 guys in a garage in Finland with 1.5 billion between them. It's the Angry Birds guys, which essentially have had one hit. So it's really hard to figure out the formula. Everybody sees these big hits and tries to replicate them and can't do it. It's King with Candy Crush, who is rumored to be filing for an IPO. I'm not sure what's going on there. It's been a while.
What about the Steam console? Have you? I was trying to ask some of the younger people, Benzinga here, about video games and stuff, and Chelsea mentioned the Steam console. Are you familiar with that?
Yeah, the Steam Box. It's a little tiny compact PC. I mean, really compact. It's like 5 inches by 5 inches, even smaller, I think. And it connects to your television and it connects to the internet. So it's the guts of an Xbox. I mean, it does the same thing. It runs Linux, which is odd, and it'll play PC games. It won't play Xbox games or PlayStation games or mobile games. And so I think it's rumored to be coming out at $1,000 price point. So it's sort of like a super high-end, Chromecast or super high-end Roku box. I'm not sure why anybody except a hardcore PC gamer is going to buy it. That's a pretty big market. I mean, it's probably 30, 40 million people that fit that bill, and they'll sell 3 or 4 or 5 million of them. If Valve, who's making it, decide to put their franchise title, which is Half-Life 3, on that box exclusively, it'll sell 10 million units, and it'll be something. But it doesn't look to me to be an alternative to a console, or an alternative to buying a cell phone, or an alternative to even having a PC for other reasons. So it's interesting, substantial niche, but I don't think it's going to be a threat to anything.
Okay, well, we've had Michael Pachter on, research analyst at Wedbush Securities, giving us his views on video games, social media, and digital media. Michael, I can't thank you enough for coming on. This has been a great interview, given our investors and traders a lot of insights into the markets, and certainly would like to have you back again, perhaps after the new year.
It's very kind of you. Thank you. It was a pleasure to be here.
Thanks,
Okay.
Michael.
Okay. Now we're going to shift it over to Mighty Joe Young with the morning headlines.
Thank you very much, Joel. Thank you, ladies and gentlemen, for listening. That was Michael Pachter from Wedbush Securities that we just had on the show today. Thanks, Michael, for coming on. Reports coming out most recently from the Detroit Free Press that multivitamins and supplements are not helpful, according to studies. CNBC mentioned this morning on Squawk Box, and there's been other reports out on it as well. The latest studies on vitamins have some medical experts saying case closed. It's time for most consumers to stop wasting money on multivitamins and other supplements because they have no proven benefits and some possible harms, reports the Free Press. That comes in a strongly worded editorial that accompanies 2 new studies and an experts panel report published in the Annals of Internal Medicine. The joke this morning on CNBC was the discovery that multivitamins do not prevent death. Just an FYI, nothing prevents death. Deutsche Bank is to ban multi-dealer online chat rooms in addition to JP Morgan. Deutsche Bank will ban the use of multi-dealer online chat rooms, sources say, as banks crack down on inappropriate communications by staff following a string of scandals, reports Reuters. The bank will extend the ban on multilateral chat rooms already in place for its foreign exchange and fixed income staff to all its corporate banking and securities businesses, including equities. JP Morgan reportedly will also ban multi-dealer online chat rooms. Google is testing smart thermostats. The company is running a trial of internet-connected home thermostats under a program dubbed Energy Sense, according to the information, citing 2 people familiar with the project and an internal document. Hewlett-Packard is expected to edge Lenovo in Q4 notebook shipments. DigiTimes reporting that Hewlett-Packard is expected to be the top notebook vendor in the fourth quarter in terms of shipments, with 7.6 million units projected, edging out Lenovo's 7.2 and now private Dell's 5.2 million units. This is citing sources from the upstream supply chain. Microsoft's plan to stop support for Windows XP led to more demand in enterprise notebooks in the second half of the year and is expected to continue pushing enterprises to replace PCs in 2014, the report added. A leaked memo, according to the Business Insider, indicates that Patch is not dead. The New York Times yesterday reported that AOL would begin to close down local news network Patch. According to a leaked memo obtained by Business Insider, this is not the case. Patch COO Lee Zarelli Lewis said that we are continuing to talk with potential partners about Patch and there is no change in course or direction from what we have discussed as a team. Patch gets and will get a lot of media coverage, but we will keep you updated as we walk through the partner talks. The most important thing to focus on is the service we are providing to millions of local consumers and customers. The European Union may allow refillable electronic cigarettes, according to the Wall Street Journal. The struggle over new EU regulations for electronic cigarettes now revolves around one issue: refillable cartridges. Negotiators for EU governments, which want to ban refillable cartridges, and the European Parliament, which believes they are essential, have drafted a compromise on the issue. But officials say it was too early to publicly announce the final form of the new law. General Motors CEO says government took a risk and rejects the payback of loss, according to the Detroit Free Press. Dan Akerson says he would not accept the premise that the government made a bad deal in rescuing the automaker and rejects any suggestion that the company should compensate the Treasury for the $10 billion in losses it incurred. That is again according to the Detroit Free
Did you read the
Press.
Free Press today, Joe? I mean, you're giving a lot of things off the Free Press.
Well, the Free Press has a lot of interesting coverage, Joel.
Yeah, but if you read the news, you know.
Right, right. Well, I did say that the multivitamin issue had been reported by several sources previously. It just happened to be the Free Press headline that came in front of me. Free Press is generally first and foremost when it comes to automotive news, though, wouldn't you say, since we're so local here?
Yep, that's true. That's true. Sorry to interrupt you, Joe. Go back with the news.
All is forgiven. Just because it's Friday for you, Joel, doesn't mean you can just cut in on my news headlines, okay?
Yeah, well, at least I didn't forget your segment today.
As mentioned earlier on the show, Facebook is to start selling video ads this week. The Wall Street Journal says Facebook will begin selling video advertisements later this week, according to sources. The ads, which will play automatically in users' news feeds, may help Facebook capture a share of the $66.4 billion advertisers are expected to spend on U.S. TV this year. That's quite a chunk of change. $66.4 billion. Goodness. So, let's see. Twitter is said to be working on an edit feature. According to the desk, Twitter is working on a feature that would allow users to edit published tweets. The feature has reportedly been a top priority at the company for months. Sources say that is a relief to hear for fast typing and spelling errors.
Or for like really bad typists, like, hey Dennis, did you hear that? You're gonna be able to edit my misspelled tweets.
That's right. The hunters and peckers will be able to edit their tweets now, which actually I made an oops with Michael Pachter's Twitter handle during the show, so I had to delete the tweet and send it out again. If I was able to edit, I could just fix it, and all the retweets would be fixed as well. According to Business Insider, Amazon has acquired GoPago. Amazon has bought GoPago, a mobile payment startup and competitor to Square, citing the Italian newspaper La Repubblica. The publication adds that Google has been interested in buying the app. That Google has been interested in buying the app as well. It's like Amazon beat them out there. Whole Food stores in unconventional locations beat expectations. The New York Times says that Whole Foods' strategy of opening stores in places where it was thought that consumers wouldn't be interested in its products appears to have worked, according to the Times, which cited a Barclays Capital analyst. Sony is shaking up its U.S. leadership team. All Things Digital says that Sony is shaking up the U.S. leadership team, moving current head Phil Moilino to non-executive chairman. Michael Fasulo, current executive VP and head of sales in the U.S., will become the new president of Sony's U.S. team.
Joe, before you move on here, I just was looking at this Whole Foods chart. I just wanted to pipe in real quick. Number one, I want to know how the one in Detroit's doing. They just opened that, so I don't know if that's what they're referring to. But look at this thing coiling up here. Just skimming along the bottom here, and we have a bunch of tops at the 56.60 area, trading up 56 cents in the pre-market here. So this is one. If the market gets a little strong here, I might even buy.
Well, I mean that would be pretty interesting. Thanks for pulling up that chart, Joel. My assumption is that I would have to dig into this report, but the Detroit placement of a Whole Foods market may be included. Didn't seem like a likely spot, but every time I drive by there, my brother lives downtown. He says it's packed constantly, so apparently that's the place to be downtown. But also there weren't any other grocery stores there either. Ford is preparing for life after Mulally. Reuters reporting that Alan Mulally, a top contender to lead Microsoft, is unlikely to stay at Ford through 2014, according to sources and people close to the automaker, whether he gets the job with Microsoft or not. The view from inside Ford and others is that the management team Mulally groomed is now ready for his exit. COO Mark Fields is widely expected to take over as CEO of Ford. Yet, the challenges ahead for Ford are still significant, analysts say. Joel, what do you have to say about that?
Ford's I'm sticking to this 1720 level. I know you mentioned all that fundamental news here. Had the big sell-off under 1640. We've had 3 up days. I'm looking till it gets through that 1720 level. It's kind of hands-off there, multiple tops. But over the last 3 days here, has had a nice run. And since we're looking at Ford, we can look at governmentless motors here, and that's still moving along since Lisa, issued her buy recommendation here. Actually made a new all-time high in the reissued stock yesterday. So I'm sticking with the I'd rather be the GM buyer than the Ford buyer.
Well, I mean, even if Mulally left, what's to say that his vision and, like I said, the executive team that he's groomed here couldn't carry out his plans with Ford going forward?
I don't know. I got a bunch of Fords in my driveway, so I guess I should. I should be leaning that
Yeah,
way.
that's funny. I actually come from a Ford family too, although we've been split now because we have both Ford and Chrysler employees in the family. So, Ford for a long time though. Lastly, here in the headlines, Volkswagen is recalling 2009 to 2011 Tiguan compact crossover SUVs. The LA Times reporting Volkswagen is recalling over 62,000 Tiguan models manufactured between 2009 and 2011 as the housing for a fuse for the exterior lights could melt, causing the lights to stop working, increasing the likelihood of a crash. The automaker is also recalling almost 4,000 2013 to 2014 Volkswagen Jetta hybrid sedans, as fluid used in the car's transmissions may be corrosive and result in an electrical short and failure of the transmission. Caesars and Starwood Hotels to jointly promote loyalty programs. Bloomberg reporting that Caesars Entertainment and Starwood Hotels and Resorts worldwide are jointly promoting their customer loyalty programs, offering guests an incentive to spend more on rooms, shows, and meals with both companies. With this deal, Caesars expands its marketing beyond gambling as non-gaming revenue gains importance, while Starwood gains access to customers of the biggest operator of casinos in the U.S. That wraps it up for today's headlines, and on to today's second trivia tidbit. On this day in 1903, Orville and Wilbur Wright made the first successful flight in history of self-propelled heavier-than-air aircraft. Orville Wright piloted the gasoline-powered propeller-driven plane, which stayed aloft for 12 seconds and covered 120 feet on its inaugural flight. Not a long flight, but still the first. Just a reminder, ladies and gentlemen, this show would not be possible without our dear friends at OptionsHouse, who will give any of you 150 commission-free trades just for signing up with an OptionsHouse account.
And what was the name of that plane? Or where did it take off from? One or the other.
Friday, Joel.
Come
Friday,
on.
Joel. Kitty Hawk,
There
North
you
Carolina.
go. There you go.
First
Ding, ding.
in flight, that's what it says on their quarter. And, yep, Kitty Hawk, North Carolina, first in flight. Orville and Wilbur Wright. Thanks, Joel.
I got that right on my 3rd grade history test.
You know, Joe, I thought you were, for a second, when you're saying just a reminder, I thought you were going to put out, like, just a reminder that we shouldn't be making our own powered aircraft or something along the lines of
Oh,
that.
yeah, right. Do not try this at home.
Yeah. I was just thinking about how terrifying that would have been for Orville to hop it in on that plane, and be like, yeah, no one's ever done this before. Let's. I just strapped a motor to this wing. I hope this works.
But if you do try it at home, and heaven forbid that you injure yourself and find yourself stuck in front of the computer, don't forget that Options House will give you 150 commission-free trades just for signing up with an account through this page. So check out those links at the top and at the bottom right. Go through the Options House process, sign up for an account. They'll give you 150 commission-free trades just for listening to Benzinga's pre-market info, where we give lifelong, helpful, useful advice about not trying to fly your own plane at home and about the origin of Lincoln Logs. And that wraps it up for me. I'm going to hand it over to my friend Jake here, who will give us pre-market movers ahead of the opening. Well, it's
Yeah.
9:30 now.
Yeah, now
The bell rang.
Yeah, we're actually at market open movers now, but I do want to hit up a few of the big names out there. Big news on 3M this morning, bumped their quarterly dividend from 63.5 shares to 85.5 shares. They also bumped up their fiscal year 14 EPS guidance from $7.30 to $7.55. That's the range they gave, and the street was looking for $7.40 a share. Looks like they're also bumping up their buyback. Originally, they were buying back $7.5 to $15 billion in shares, and now they're moving it to $17 to $22 billion in shares. So, increased buyback, increased dividend, increased guidance. Things looking good for 3M here. Shares are on the move this morning, up a little over 2%. Joel, what do you think of 3M here?
Just have a scenario here where it got a little overhead of itself in the pre-market, made a 131 and a quarter high in the pre-market. So if you're using your 131 target, good for you, because we're a buck away from that level now. Opened up at 61, 130, 61, 62 high, and we've went now under 130. So here's a scenario where they got a little overdone in the pre-market. That's where we're trading now.
All right, we got another big name yesterday doing another capital allocation here. I want to check out Boeing. That's Bravo Alpha. Company initiated the largest share buyback in company history, which at $10 billion, and bumped its dividend up by 50%. So huge move for Boeing there. Bravo Alpha is the ticker for those of you following along on your own charts. Shares are up this morning a little under 2%. Looks like we're at about 137 on the nose, actually. Joel, Boeing's been on a huge run this year, up basically 100%. What do you think of Boeing?
I think that in the pre-market, once again, got a little bit excited here. Got over the initial spike when you broke the news, Jake. 138.20, and then a couple times in the after hours in pre-market, snuck above the 138 level. In fact, just before the open, traded 138.17. Here's another one where if you were fading this off the hop, 138.15 high, that was the high of the day. We backed off a buck and a half already from that level. Looking at the dailies here, we still have a little ways to go to fill that gap from yesterday's trading all the way back down to 135.20.
Another one I want to take a look at is Herbalife. Classic battleground stock here. Looks like the company did release news yesterday that it had closed the audit on its 2010, 2011, and 2012 financial statements, and there would be no material change to any of those statements. So that is huge news for Herbalife. They resumed trade after that announcement, and they're up. They closed up over 9%. Of course, Carl Icahn has to come out and say he still believes shares are pretty undervalued. There was another source that Charlie Gasparino tweeted about saying that Carl Icahn believes the stock is a $100 stock. Huge move in Herbalife there. And then, Bill Ackman has to come out and obviously reiterate that he still thinks it's a pyramid scheme. Herbalife, Hotel Lima Foxtrot, for those following on your own charts. Still the classic battleground here between those two guys fighting it out. It just continues to rally.
Yeah, Uncle Carl's really obviously winning this battle. We have exceeded the pre-market high so far in trading today, snuck above the 77 level, couple occasions, 77 a quarter. Now trading 77.75. There's really no resistance for this thing. Maybe look at the half and whole numbers as this stock rallies up as a potential on the downside if you're trying to be protective if it goes into decline. Under 77 bucks here. The that could be in a little bit of a vacuum as just raced up on this news.
Giving it some more fuel this morning, as was a D.A. Davidson reiteration of a buy, but they bumped that price target to $115. And just a little while ago, we did get a rating from Canaccord Genuity maintaining their buy on Herbalife and bumping the price target to $87. So not as bullish from Canaccord Genuity there, but you do have a pair of upgrades along with some material news there. Wouldn't be surprised if that gives it a little bit more force to the upside today.
Do you know anybody that uses those products at all?
I don't. I mean, I don't think you can really buy those without being involved in the whole. I mean,
The whole Ponzi scheme?
yeah. I mean, let's be honest. It is what it is. It looks like I'm not a huge fan of multi-level marketing companies, but who's going to be right, Bill Ackman or Carl Icahn? I'm going to guess Carl Icahn's right because I don't think they're going to get shut down personally. That's just my view. But as far as how ethical their business is, I don't know.
Jake, just real quickly, the S&Ps are under pressure here in early trading here. We made an overnight low at 77.50. We are hitting that level right now. We are at 77.75. Yesterday's intraday low, because we had that crazy unexplainable move during the pre-market, but 77 was the low for yesterday here. So I might be turning a little bit bearish here if this pre-market low of 1777 even doesn't hold, because there is not a lot of support under this area. Just got a quick buck bounce, but let's see if major area for the S&P futures here within 5 minutes of trading.
Wow, I mean, got enough sevens in there, so we'll keep an eye on that S&P movement there. One other one I want to take a look at this morning is FTR, Foxtrot Tango Romeo. That's Frontier Communications. Company acquired some assets from AT&T. Actually, is their landline and business services in Connecticut. They bought it for $2 billion, yet Frontier Communications is on the rise heavily, as is AT&T. AT&T was up about 1.5% last time I looked, and Frontier Communications up over 9%. So shareholders really liking this.
Yeah, they are. A big gap up here. Looked like it was Frontier was about to break down here at the 440 level. Then boom, lo and behold, you're back up at closer to the $5 level. Just one note for traders in this issue: 494 opening print, 494 high. Perhaps protecting this $5 level. You had a 502 high back on November 20th here. So so far resistance, and I haven't taken a look. I'm gonna guess here. It's AT&T. I'm gonna say 36. Let me take a look here. No, it's much lower here. $35 here. This stock is coming down, kind of fitting into Dennis's whole, sector shift out of things that are a little bit interest rate sensitive. Here you have a dividend stock. The stock is coming off the highs here. Let's just look, if you're owners of AT&T here. We're going to give you a level here on the downside to keep an eye on, and it's right where we at right now. 34.05 was your low, your current low. 34.06 yesterday's low. Trying to put a double bottom here. Might have some institutional buying at 34, but danger, Real Robinson, for AT&T going under 34.
Definitely an interesting thing to watch there, especially with how much it was up in the pre-market and then kind of pulling back from that. Some interesting action there. One last one I want to look at before I hand this off is Facebook. We did see some action in that this morning. Shares are up over 2% right now. Let me check to see if there's news on that one. I didn't recall seeing anything on the wires on Facebook. Foxtrot Bravo, for those following along. Looks like we had a Susquehanna upgrade.
Video ads.
That'll do it, and then a series of upgrades. Also, the most searched brand on Google in Taiwan, apparently. But yeah, auto-playing video ad for the news feed. Oh, that's gonna be so annoying.
That's what Dennis said.
Oh my gosh, that's gonna be that's great, great for Facebook. Probably not so great for its users. We'll see. But Susquehanna did upgrade the company to positive while raising that price target to $68.
Just a real quick note here on this AT&T. You did have a high on Monday's trading at 34.51. and then you're trading in there. This is like fade the rally in the pre-market day or something. All these rallies, but 34.51 was the exact high that you had from Monday's trading, and that seller was back out there today. We are now resting on the $34 level. S&Ps have made a new low for the session here. We have taken out the pre-market low. I don't want to get too excited here because I don't have any puts on, but we are in a danger zone here down to Wednesday's close at 1768.50 here. What do you think? Some people taking some chips off the table. The two-day meeting, maybe they will taper tomorrow.
Somebody call Kenny Loggins. We're in the danger zone.
We're in the danger zone, and our astrology forecasters said the stars were lining up yesterday for a taper. So we
are heading towards the end of the year though, because you have a lot of contract expirations because of the end of the year. You've got a little bit of a compression there, so that could be making things a little wonky. Also, you've got next week is going to be a dead trading week with, half day on Christmas Eve, a day off on Christmas Day. So you're expecting next week to be pretty weak. You might get some more action this week because of that. Maybe desks or traders trying to get in, a little bit more profits, or trying to make up for some more losses this week. So they can, take.
But
the
Jake,
week
let's
off
say
next week.
you're a fund manager,
Right.
okay, and you're riding the social media wave here and stuff, and you get paid on a percentage of your profits for the year and stuff. The market's just had an incredible run. You do have the threat of tapering, coming in 2014. Aren't you more inclined to be taking some profits here and selling into these rallies? I mean, that
You'd have to think so, yeah.
Yeah, that rally yesterday. I mean, in my head, it sticks in my mind going down to 1754
Right.
and then rebounding up. I mean, you did get a little bit of juice. I'm telling you, that Goldman Sachs upgrade yesterday of ExxonMobil, big dip in the SPOOs. They got it going. I can't look at their blotter, but I just wondered if they were just selling futures all into that rally yesterday, because it really came out of the blue. And if you want to go back to ExxonMobil here yesterday, we're about $2 from that high that it hit within the first 15 minutes of trading. Looks like it might even come down if this market continues to be as weak as it is off the hop here. Boy, we are just falling. Is there any other news, Brent, hitting the wires here? Because it is just a sell fest here. In the S&P futures. The low in ExxonMobil. Here's another stock opened up 11 cents from its high. We need to get down to 96.13. That was yesterday's low, and then another 20 cents to fill the gap for Friday's trading.
Looks like Mohamed El-Erian was on Bloomberg TV saying the Fed will offer other things when they taper. What are the other things? I don't know, but that while that's probably not everything, that could be causing a stir out there. We know everybody's really watching the Fed closely right now. So when you have a guy like Mohamed El-Erian saying, making comments on the Fed, that's going to move things around.
Joe, could you get Mohammed on for next week? Or
Sure.
I'm going to be back.
Yeah. No. We'll schedule him when you're not here. It's fine.
Well, no, you just pencil him in. I'll take care of it.
I'm such a good interviewer. And if Mohammed's not available, get Bill Gross on the line.
Okay.
All right, yeah.
Yep, I'll get right on that.
Give
How
a-
about
give a
Bill
look.
Ackman too? Maybe we could get some comments about
Hey,
the Herbalife.
And Carl, who knows?
Uncle Carl.
Yeah.
Maybe we could pull another Scott Wapner and get
Oh,
Ackman and Icon on the
yeah.
on at the same time.
Okay, I just want to, before we get your final comments, Jake, here, Sun Edison trading again here. We got to look at it for JH3, our loyal person here in the chat room here. Sun Edison running into trouble at the $12 level. 12.08 was yesterday's high. $12, the low in today's session here. So got a nice bump off that 11.11 low. But JH3, I mean, the company came out and said they're not going to make as much money, and bringing down the forecast. So perhaps you need to turn your attention to another issue here until the company comes out with a little bit better news.
Well, with that, I guess, Joel, I'm going to sign off here, hand over the headphones off to Brent for the last couple of minutes, and I guess we'll see you next week then.
Yeah, next Thursday. So we'll be back with you. Let's grab Brent here if he's got a preview of anything. But before we get that, PSTI, and I love when people bring up stocks that I've never heard of before. Oh, here we go, and it's always a pharma stock, right? Yeah, the pharma stocks like to move. So This is well, it's either a bad drug trial or a good drug trial.
Nah,
No,
almost.
no. What is it?
So they're gonna issue 2.5 million shares in exchange for 1.011 million shares of CHA.
Wow. Okay, so this is a multifaceted question here. Uh, just looking at the initial pop here in the PSTI, you did open up into a little bit of resistance here, 3.48. That matches the high to the tick on November 18th. So open a little bit of resistance. You also have another level here at the 350 level. So uh, until it takes out that 350 level here, it looks like they're selling the news here, a little bit of a pop. You need to get back down to the lower 330s to fill the gap here. But get real bullish this thing, a close over 350. And who are they doing? Who are doing the swap with?
A company called CHA Bio, and
What's the symbol on that? Does that have a
I don't
symbol?
think they're. I think it's I want to say Asian.
Okay. All right.
But it's basically a $10 million mutual investment by both companies. So apparently the street's liking it today when it comes to the old Plurus them.
Yeah, but it's trying to actually it only has another 4 cents to fill the gap here at 334. Also a couple other highs, 330, 334. So if you did short this thing off the open, old resistance should be new support. So Brent, any final words here? I'm not going to be. Maybe I'll call in as a special guest and do that during the week.
That'd be kind of fun.
But any words of wisdom for our traders, investors today, or what to look for the rest of the week?
Of course, we do have the Fed rate decision tomorrow, and that is going to be at 2 p.m. Eastern Time. I would expect the markets to be relatively quiet until that rate decision. I feel like a lot of traders probably wait until 2 to sort of make a lot of their bigger bets for the day. Then on Friday, we will have the third and final reading for Q3 GDP. Heads up for that one. We are at 3.6% growth right now by the street, by the analysts on the street. Earnings wise, we're going to have Jabil Circuit after the close today. That is JBL tomorrow. We're going to get Oracle, ORCL. I have FedEx also on the radar for tomorrow. Also General Mills. Let's see. Thursday, we're going to get Red Hat. We're going to get Rite Aid. We are going to get Pier 1 Imports. Also going to get Nike. And I think, what is this, Thursday or Friday? This is also Thursday. Darden's going to be Thursday. And on Friday, we're going to get Accenture. We're going to get Walgreens. We're going to get CarMax. We're going to get Black Bear. We're going to get Finish Line.
Oh boy.
Wow. You weren't prepared for that, were you?
No, but before we close out the show, we had talked about Twitter here yesterday and its sell-off on Dan Niles' news of being short the stock here, and we identified a support point 55.45 to 76. Call that whole area 55.60. Well, we went down to 55.81 here, so that support is holding here, but definitely a danger zone here under 55.60 for shares of Twitter. So running a little long today, we're going to end the broadcast. Hope you enjoyed. Enjoy all the questions, and I'll be back with you next week.